what exactly is Canton, and what problem are you solving for these institutions that's making them sign on with you?
Sure. So maybe we should start from a point you made in your introduction, which I think we'll probably discuss in more detail later on, which is you said Canton has been the only thing that has been green for the last week or so. And maybe another one that is worth highlighting is Hyperliquid. And what's unique about the two things, which is I think that one of the things that I found very compelling when I got into the space a long time ago was this idea that crypto pitched itself as a way for everybody to own a piece of infrastructure that actually generates utility for the world. And the reality is that I think that us as an industry have done a lot of great things in terms of proliferating the technology, explaining why this technology is important. But when you end up thinking about most of the tokens that have been launched or the ones that are already still in existence, not a lot of value gets accrued to the token holders. And for us, one important thing, and we'll talk about how we did that, was to make sure that whatever success we have on Canton, whatever utility we drive on Canton, that value needs to mechanically flow down to the token holders. Now, I think that to your specific question about what is Canton, well, I think that the way I think about blockchain is the idea of blockchain is the ability to represent assets natively on chain. As a result of that, those assets have higher velocity. We talk a lot about, stable coins, the ability to move US dollars 24/7 in real time all over the world. That is velocity. Another component of blockchain that is critical is composability. It's the ability to embed and settle an asset against another asset atomically without any settlement risk, again, 24/7 real time. And those few things have got people really excited about crypto. The idea of asset mobility got people excited. I can now send value all over the world 24/7. The idea of composability, create a DeFi. I can pledge a token, get a loan. I can swap two assets on a DEX. Those are examples of composability. And when you end up thinking about that in the context of the real world, those are actually two really important problems to solve. As we know today in traditional system, you can't really move money as efficiently, although you can stream movies, you could do a lot of things very sophisticated. It still seems that assets have some friction associated with them, especially when you start crossing borders. We use the term in financial services DVP or PVP, delivery versus payment, or payment versus payment. And inherently, people think about those terms as if those two things happen atomically. They never do, meaning there's always settlement risk, trade breaks, and things like that still happen in very large quantities in today's world. So those two features are extremely important. The problem is that one thing that crypto has neglected is privacy. So as we all know today, every account in crypto is pseudo-anonymous. We can all kind of see. And when you actually look at some of the intelligence offering on crypto rails, they really know who holds what at any given point of time. I would say that the government agencies are some of the biggest users of said companies, and they really know who does what at any given point of time. And as a result of that, when you end up talking about, well, what would it take to get institutional adoption, when you end up having the conversations with global treasurers treasurers of publicly traded companies, when you talk about different managers of different business functions, what you find out is they say, well, asset mobility or asset composability are really, really important things for us. But if that means that the rest of the world would know what we do from a financial perspective, no, thank you. We'll take the friction. So really what we've done when we launched Canton, and we'll talk about some other things, was really the ability, how do I bring privacy on chain? And we should not mistake that for anonymity.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. So much value that Yuval Ruz just spit there to unpack in today's video breakdown. We're going to be diving down the rabbit hole, going over some recent video breakdowns and fundamental developments that have taken place in the digital asset ecosystem. And we're going to be fixating our attention on privacy and some other things that Yuval just mentioned, like bringing value to token holders. Right? That is such a huge statement that was one of their main focuses, that the value that the utility, the Canton network brings actually trickles down to the token holders themselves, where you don't really see that the likes of other digital assets, so I'm not going to name, in today's day and age on other layer one blockchains. It just goes to support the case for Canton in this new digital era. Now, particularly focusing on privacy first. Shout out to the Milk Road for this interview that was published just yesterday. Shout out to Yuval Ruz and the host of Milk Road for this particular interview. Go give them a follow over on YouTube. But nonetheless, this just goes hand in hand with something that the chief innovation officer at Swift mentioned recently at the Ondo Summit podcast. And I really truly feel like even myself have a hard time digesting comments like this, where the chief innovation officer at Swift specifically said that banks are not going to publish bank A, bank B did this amount at this time on a public blockchain with PIA information. That is not happening. I'm going to play this video clip for you guys here, but Yuval Ruz went on and reposted this and said, it's amazing how we only woke up to this revelation only now. It was obvious to us 10 plus years ago. Take a second and listen to Tom from Swift go on to confirm this. And this is just from yesterday. So think about the landscape, think about all the hype and the overinflated expectations of this public blockchain is going to be utilized for this and this, this and that, when in reality, none of them right now are being utilized because these financial institutions are not going to put their private information publicly available on a public blockchain for the world to see. Take a second and listen.
Because we know that privacy is table stakes in institutional finance, right? You're not just going to publish Bank A and Bank B did this amount at this time on a public blockchain with PIA information. That's not happening, right? So privacy matters, but the temptation for open shared public infrastructure, like the network, the internet, like we see what's being built in Ethereum, for example, it's irresistible, right? We're going to get there. The question is, how are we going to get there? We're not going to do it on day one. We don't have to get there on day one. We can kind of start small and prove the value. But again, if we really want to get to scale, and we want to do that on a global basis and harmonize, what settlement looks like, these things need to get worked out. And
now, real fast, I want to make one thing very clear. This is not a video breakdown of me saying that public blockchains are not going to be utilized in the future. This is just me showing you guys that these large financial conglomerates and industry-leading experts are telling you all that they're not being utilized right now, which goes hand in hand with what Yuval's going to say to you guys later on, that right now we're still in a speculative trading environment where these public blockchains are not really truly being utilized for their underlying utility yet. I have a firm belief that in the future, we are going to see more public blockchains and more layer ones adopted on a global scale by these large financial conglomerates. Hopefully, you all, as my followers, are starting to see that only real utility is going to take us to those higher price levels. Once that kicks in, then we can start to expect higher price levels on certain digital assets that we speculate on, so on and so forth. But until that happens, which it's not now, we have to be patient. We have to be observant on what's actually taking place in the space at this moment in time. And in some cases, bring ourselves back down to reality. Even myself needed to do that over the past consecutive couple of years. So I'm not saying that they're not going to utilize public blockchains. I'm just showing you guys that these financial conglomerates are telling you all on stage in real time at recent events that that is not what's happening right now in the moment. In the future, it 110% could, and I have firm faith in the fact that it will. But right now, unfortunately, that is not to be the case. And we're still stuck in this trading environment where speculative trading is what is driving the price valuations of these digital assets. And so again, you're not taking that from me as my personal opinion. You're taking that from the chief innovation officer at Swift. And what I find amazing is that down here at the bottom, after Yuval's comment and rhetoric up here from the repost, we have Jeff Banman going on to say, fact check, this is true. I was literally in meetings 10 years ago when Yuval Ruz's company came into the regulators. I was then at the CFTC and explained that DAMO was designed for precisely this purpose in terms of financial privacy, which is just major confirmation that Canton Network is doing the right thing in the ecosystem that financial institutions actually pay attention to and really want to utilize. Coming over here just to look at Jeff Banman's credentials so that you guys don't think he's some random person. This dude has some major history in the financial markets. Right now, currently, he has his own advisement firm called Banman Advisors, but he has a seat on the chair of the board of directors at the Global Blockchain Business Council. He also used to work at the European Securities and Markets Authority, or the ESMA. He also was an industry fellow instructor at the Institute for the Future. He was an expert panel of the EU Blockchain Observatory Forum. He was a regulatory strategist at Kalshi. And if we come down here, he was also an ex-regulator at the U.S. Commodities Futures Trading Commission. So huge confirmation from this guy on Yuval Ruz's post that this is exactly what Canton was built for. And we're actually seeing it play out in real time. If you guys remember, just the other day, we had this announcement from Lloyds Bank. For the first time ever, Lloyds and Archax complete the UK's first public blockchain transaction using tokenized deposits. And as Tom mentioned from Swift, he specifically talked about how are we going to settle these tokenized deposits. And here you can see that this is taking place on Canton Network. Coming over here, there was another comment that just aligns exactly with what Yuval Ruz had mentioned, that they have been focused on this for the longest time, exactly what Tom said from Swift, and that is this gentleman here, Chris Maurice from Yellow Card. Now, in the previous video breakdown, I showed you guys how Yellow Card is a huge stablecoin infrastructure provider, and you guys can see that his organization is backed by the likes of Visa, Western Union, PayPal. They have over 106 plus tier 1 banking partners, and they are supported in over 35 different countries. Take a second and listen to what he said in a previous panel discussion alongside Eric and Jason.
The ability for, Canton and, technology, this type of technology to make these institutions feel safe moving money, right? To feel, secure, to feel like they still have that control, they still have that, the privacy that they need. All of that is critical as we think about how does this technology actually replace correspondent banking, because it's not going to happen on a public chain. It's going to happen on individual banking sort of networks. This is all I think about all day. I don't even have hobbies. I just think about stable coins and FX all day. And so, yeah, I mean, I think, look, I think that is key. But I think that people oversimplify the concept of bringing FX on chain. And there have been a number of companies, even now, there's a number of companies that are trying to bring FX on chain, which sounds great. Right. And, you can raise a bunch of money and, everybody loves the idea of bringing FX on chain. But the actual process of doing that involves working with a ton of institutions in a ton of countries that are not going to do this on public blockchains. And they're not going to do it, with assets that they don't have some semblance of control over. Right. And I think, this is where a lot of what, Eric and Canton, really helps with, and a lot of where this comes in is as you think about, institutions in these countries that need to be on chain for on chain FX to truly happen, right? The banks, the telcos, the large corporates, et cetera. Look, we had a call with the C-suite of a bank, one of the largest banks, in emerging markets today. These guys are not going to use a chain that they don't have control over the consensus. They don't have control over the ledger. They don't have control over any of it. Why would they, right? They're a massive bank. Why would they give up that control? And so I think, you need a system where all of these banks have interoperability, but also have control, right? And that's, to me, that's really the magic of what, Canton has built, and why, why I think that like the solution that these guys are working on is really the only way to bring FX on chain, right? I don't think you can actually just issue stable coins for all these different currencies the way that, Tether and Circle have. I think the US dollar is a very unique currency in global trade. These other currencies are going to be controlled by banks. These stable coins are going to be controlled by banks. They're going to be controlled by, the financial institutions in each of these countries. And they're going to want, a certain level of control to feel comfortable actually putting this stuff on chain and making this stuff available. And so I think, as you think about FX on chain, there is still a long way to go because there are a lot of institutions that you need to bring on chain. And I think, frankly, Canton is, one of the only ways that we've seen of actually being able to convince these guys that it's safe to move on chain.
Canton is one of the only chains that has been able to convince these guys that it is safe to move on chain. So I'm just trying to show you all how over 4 industry leading experts, not just random retail, Twitter hypey, overinflated researchers that just pump out expectations and opinions and belief systems to you all. Now, these are people with valid institutional credentials telling you all that right now. I'm not saying that in the future they won't, but right now, we're not seeing these institutions scale and utilize these public blockchains because they're not willing to sacrifice the privacy requirements that they must meet for their regulatory mandates. And Canton facilitates those needs. Last but not least, I want to play this particular video clip. Again, this is not financial advice. I'm not trying to show you guys Canton. Invest or don't invest, up to your own discretion. It's your own personal research. I'm just showing you guys that overinflated hype and expectations exist in the market, and there's a lot of promises that have been laid out on the table for us as retail investors and institutions alike to adopt these blockchains and these digital assets. And now here we are, and we can actually see over the past consecutive couple of months which digital assets are actually providing real utility that trickles down to the token holders. And Canton is one of those assets. Coming over here, back to the Milk Road podcast, this was super bullish for the long-term perspective in the digital asset ecosystem. Listen to Yuval Ruz mention that $10 trillion is too small and give you a sort of scope as to the amount of money that could possibly come on chain in the consecutive coming years.
Where are we in a few years? I actually think that $10 trillion is too small of a number. And I'm not going to make necessarily a prediction, but try to explain to people. We do, like, not we, Broadridge, who deserve all the credit, do, anywhere between 300 to 400, even over $400 billion of repo every day. And in the crypto ecosystem, that seems like a very large number, right? So it also sounds, I assume, like a large number. It's a tiny number.
Yeah.
It's a tiny number. I wouldn't say it's negligible, but it's tiny in the sense that on a daily volume perspective, repo trades about $10.5 trillion every single day, volume. So we don't even do 5% of it yet, right? So I think that what we're trying to reorient the crypto community to understand that billions is not the right measurement. The DTCC processes quadrillions a year. 10 trillion, I think, is just not enough. So I think we're going to see a much higher number than that.
I think we're going to see a much higher number than that, which leads me over here to this last post from Yuval. Very sad to see this industry take such a hit. When there's excitement about corporates moving on chain, you'd think that we'd be only in the green. What's clear is that investors are asking, why am I holding this asset? And they're not getting good answers. Jay Dorman wrote about this the other day. And if we come over here, I'm not going to read thoroughly through the entirety of this post, albeit it is a really great read, so definitely go check it out. I'll give it a repost so that way it's at the top of my X profile if you guys want to check it out. Jeff Dorman here, you guys can see he has credentials from the CFA. He has credentials from Citadel. So again, he's not just some random dude. He's a guy that has traditional financial experience, and he mentioned 3 particular projects, 2 in which I want to focus on are Hyperliquid and Canton. Canton, one of the leading L1s for tokenized real-world assets, supposedly burned more tokens than it minted last week as the Canton network skyrocketed past other chains in terms of usage in TVL. Which leads me over here to this last video clip that I want to play for you guys from the podcast that I was on with Yuval Ruz, where he particularly mentioned overhype and pure speculation and inflated kind of just theses in the environment in crypto was being corrected. Take a second here and listen.
That what you're seeing in the market is that it's almost like bots and users are effectively just reacting, and which makes sense, by the way. But you have chains that are static where the transactions don't burn coins, the supply is fixed. They did a pre-mine, they did something like that, and you end up realizing that mechanism means that the value of the coin, the value of the network, is pure speculation. Right? There's networks that have, if you actually calculate the dollar volume, the dollar value that gets processed on those chains, and the market cap of those chains, we're talking about, in some cases, thousands of multiple. That is not rational, right? That's just, sometimes I'll say on podcasts that crypto have defied the laws of gravity for way too long, and the reality is that what you're seeing, I would say, generally speaking, is that, Bitcoin sells, Ethereum sells, and everybody is just correlated to that, right? So maybe the way to think about it is like in equity markets, or in just generally speaking markets, there's what you call high beta assets, so more risky asset. So if you think about large cap are the most safe assets, small cap are the high risk assets. So small caps are a high beta asset. If the market sells off, you expect that small caps will just sell off harder. If the market rallies, you expect small cap to rally harder. It's just how it is. So kind of similarly speaking, what we're seeing here is that there's nothing fundamental happening other than Bitcoin and Ethereum. And that's just generally speaking, there's a risk off. And therefore you're seeing that all of the alts are getting decimated as a result of that. But I gave an example of hyperliquid, and we'll talk about Canton. At the end of the day, if the mechanism of your chain is saying, listen, if utility grows, the chain will be less inflationary, or in some cases, even deflationary, that's just going to go contra. Now, I think that when you look at the volume of Canton, it's very low. And, we as a foundation, me, myself, can't even tell you how many people approach us to generate volume on the network. And we always refuse. We want the volume to grow, but it needs to be organic. It needs to be real volume. So I think what you're seeing is that the people that are focused on Canton are the people that are actually not looking at like macro and don't just like sell. I'm not going to say, there was someone just, sold in the last, hour or so, did a big sell. But I think generally speaking, what you're seeing is that people are rotating, in my opinion, into where there's high utility. That's what I think you are actually seeing. And that's why I think it's a contra to what is happening, is you're just saying people are saying, okay, well, I need to risk off. What do I rotate in? And I either rotate into cash or I rotate into things that I think are just safer.
Yeah, safe haven assets. I would agree 110%. One thing that I try to get my community to fixate a lot of attention on is that, I don't know the statistics, collectively speaking, that would be accurate, but I'd go out right and probably say that about 95% of activity in the crypto ecosystem as a whole is arguably trading activity, where in that risk off backdrop that you'd mentioned, of course, there's a flight to safety and a exit out of more risky assets. And so, that just goes to show people that, just like you mentioned that word utility, there isn't really a major utility aspect of the digital asset ecosystem quite yet. There's a lot of chains, a lot of networks that are building towards that, but it's not actually what's driving market price action at the current moment. Would you agree with that? How much of the market would you say is driven by utility versus trading activity or speculative hype?
I think that's saying that 90% is pretty generous. I think that we're still in the first inning of utility in crypto. Now, I think that a lot of times people will say stablecoins have proved that there's utility. That is true, but I would say that most of the activity in stablecoins is really just to allow trading of crypto. So I don't think that it's like true business activity, cash flow businesses.
So that brings me back to the first video that I played from Milk Road, where Yuval went to talk about how they actually wanted to bring utility to the network, which then to scale the utility on the network burns tokens and scales down to and trickles down to provide value for token holders. Well, listen to what Yuval Ruz says here, and then this will wrap up today's video breakdown.
What a lot of people are wondering too, Yuval, because we haven't chatted about it at all, and you said we would chat about it, is the token, right? Or the token for Canton and how that functions in your ecosystem. Because I think that's something I've been curious about is, you're building this infrastructure, you're convincing the institutions to come on, it's something that they can tailor for themselves. Why is there a token? And what does it do?
Yeah, so I think that again, the reason that we got into crypto is this idea that people can own shared infrastructure, and it's no different. I sometimes give the analogy that to me, public chains is the equivalent of having like a distributed cloud company. That's really you're effectively delivering like a compute network that is not controlled by one legal entity, and people can access that cloud infrastructure and build application and interoperate with one another. So that's why we really like crypto. I think that the challenge that the industry have had is, well, how, at least what you could say is that like when a cloud company generates revenue, you assume that if revenues exceed expenses and the company is profitable, the share price of cloud company goes up, and therefore shareholders benefit from the success of that company. I think that in a lot of L1s, and I'm not going to use names, there is no actually clear connectivity between the token and the activity on said network. And therefore, I think that a lot of these tokens have just been pure speculation, even though there's no clear mechanics of how the thing should appreciate. So we did a fair launch. We started zero. We didn't do a pre-mine. We didn't sell tokens. We didn't do an ICO. We did a fair launch. And really, there are three types of players that can participate in the Canton ecosystem. We call them super validators, the validators, and the apps. And the super validators are, kind of think about them like the full nodes. They run the consensus on Canton. Again, you cannot buy your way into being a super validator. You have to contribute value to the network. So anybody, LG, you could be a super validator if you write a compelling enough proposal to the list of, I think now it's 40 plus super validators, and why you can add tremendous amount of value to the network. So if you believe that you can do that, write a proposal, submit it. If 2/3 of the super validators vote in favor, you're a super validator. You run consensus. And there's all kinds of slashing if you don't perform your task. But at the end of the day, we felt that that's actually a much more fair access than just pledging money. And it's actually much more valuable to the network than just staking. Because at the end of the day, every super validator have contributed blood, sweat, and equity into the network rather than money. And I actually think that the effort of people in today's world, when everybody's busy all over the place, is much more valuable than just money. A lot of people have money. At the end of the day, we need to build utility. And build a utility requires a lot of third parties to actually do things. But that being said, I think that on Canton, the infrastructure provider, those that run the consensus, actually get the smallest part of the economics. And the reason is that because, again, we view that at the end of the day, those that generate value for the network are the applications and the users. Meaning I could have built the best technology on earth. Like, let's just say, objectively speaking, if we could actually decide this is the best technology in the world, but if I haven't convinced people to build on it and use it, it's worthless. Right? Put it in a museum of some science and technology, and that's its only value, right? It doesn't have more value other than that. And I think that there's a lot of L1s that fit that category. Impressive technology, haven't done a good go-to-market, and therefore don't have any usage. So, so for us, most of the economics go to the applications and the users by generating fees. And what does that mean? So there is a mint schedule, and the mint schedule allocates a portion of the mint to the super validator, a portion of the mint to the validators, and a portion of the mint to the apps, where the validators and the apps get the lion's share, 80% of the economics. Now, how do you calculate who gets what? And the design is by burning tokens. So anytime you want to participate on Canton, you have to burn tokens. You have to make tokens pulled out of circulation. And the idea is that if utility exceeds, inflation, then the token supply goes down. And if the token supply goes down, generally speaking, you would assume that the price goes up. Again, there's nothing that mandates it, but at least there's some kind of like a logical mechanism that says, if you keep on driving utility through the network, meaning the actual dollar fees on the network keeps on going up over time, you should assume that more and more tokens are being burned. If more and more tokens are being burned, less tokens in circulation, right? You should expect the price to go up. If the utility on the network does not exceed.
Well, that is all that I have for you guys in today's video breakdown. As always, bringing you all some deep research, many blessings. Be cognizant, be aware. None of this is financial advice. I'm not telling you guys to go out there and buy Canton. As a matter of fact, don't buy Canton coin. Don't speculate on crypto assets. Instead, do research on projects that bring real world value and real utility to financial institutions and major organizations alike. As always, I'll see you guys in the next video breakdown.